Okay, morning guys. Hey Pete, first one in. Hope you're well. Who else we got in today? All right. So you can probably tell by the tone of my voice, bit excited that we could get a decent sell off today. I think. Well, we'll see. Not so much on the SPY. I'm just looking at Hang Seng and the Dow. Could be a bit of action. So we'll go through that in a minute. Fantastic, Jason. Hope you're learning something, mate. It's all good. Through my trials and tribulations on the Hang Seng. It's a beast sometimes, but it's good. It gives some great, I find some clean with the SPY. It's not so clean. You know, your SPY, look at this is a bit messy. That sort of chopping in, and it's big enough where if you've got the 10-point stop, you can get chopped out before it runs. And yesterday I was talking about seeing a couple of alerts looking for some weakness, and it went up, and I was looking for something to go up, and it went down. So it catches you. It's a tougher one to trade, whereas the Hang Seng seems to be a bit more, like I said, clean with its movements. So let's get into it, and we'll look at the interesting thing I noticed last night. Yeah, over trading. Look, you know what I found, Jason? I found that first, if I could just look at my first trade and forget about it, I tend to have a crappy first trade, and I can be chasing my tail sometimes if you have a couple of bad ones in a row at the start. And that's probably because I'm eager to jump into the action, where it's not the right time. You get sort of caught up in I guess the FOMO of it all. You see this spike, you go, it's time to jump in, and it turns around and washes you back out again. So I think if you can keep thinking to yourself, you'll see it. The trade, you should be able to see the trade before you trade it, if that makes sense. Okay. Yeah, look, feel free to give us a call. We'll have a chat if you want later on. Yeah, we'll just go through a few things. I'm more than happy to, mate. So we'll get into this now anyway, and we'll chat about the indices. So the SPY, you can see it got supported off this level, which I find interesting considering, you know, it's not really a key level, it's just a low. And I think that was sort of the play overnight coming into the close. The US was heading south at that stage, so it was only 415. I think the Dow, oh yeah, it started to find some support as well. So that's just reacting to what the Dow movements were doing. I wouldn't mind, or would expect to see a bit of a flush high, because if you're looking at that chart, you're buying the break of 612, which is probably going to be, you know, a few sort of punters trade with your stop below. I expect it to flush higher, and then I want to see if it can build some weakness. Otherwise, if it pops higher, comes back and starts to look for a high low, then we're looking for highs, and we're going to get those bargain hunters at the start of the session. Otherwise, it could just, you know, bang straight down and catch anyone that's been buying it off that level into the close, stop them all out. All right, so you got to remember the market will need to flush people to reset. It needs to do it time and time again, just to get it resetted. That's not really a word. To get reset to you know, to build for a new move. So I think that's why we've got a lot of sellers that are built up here that just come smack down into there. They might be keeping, because really probably not so much up here, but there's an anchor. You know, that's where the action started picking up, and it started to really kick on just after this level around 60, 58. And that started to become a bit of a free fall. So we come straight back down that zone. So it would have been some profit taking there. You might expect that that's going to drag in some buyers on the open and then see what happens from there. So that's going to be in 5 minutes. The Dow complete, you know, drop. I would say, I got something funny going through my head, but I won't say that. Fell out of bed there. Really come off that. And this is the high, if you can go back. It's probably off the 30-minute chart, might be a bit easier to see. But this move up here, it's around 7 o'clock, that move into 27,163 is basically a double top. And the fact that we broke through, we're potentially breaking through this level here, and we've got the shoulder, you know, that's really caused some selling, some havoc into that level. I wouldn't mind seeing some back and fill, because that's the anchor to the downtrend at 26,940. We're a while off that. There's a couple of 100 points. So it's got some room to move on the upside, dragging some buyers for a squeeze lower. You know, if we start seeing this action, I'll be bearish tonight if I was watching the Dow, which I won't be, but I'll be bearish because I think that's enough to squeeze in some buyers to set up, especially after this flush, work its way back up off that level, and then see if we can get a shoulder to work into, because I think the markets could be turning a bit bearish. There's so many headwinds at the moment. And the NASDAQ, if that starts to cave in, the whole market's going to come with it, go down with it. And you can see that last night, we'll look at that in a second, it was trying to hold up. The Dow and the S&P were trying to hold up, but the NASDAQ was selling straight from the start. And once it became apparent that it wasn't going to ease up, the Dow and the S&P started going down with it. So that's the action we're looking at for today. Hang Seng. So Hang Seng's a good one. You can see this, this was a big sell-off that I think we were talking about yesterday. And then this is the action on the open. It flushed out that level at 25.258, which is looking okay, but that was well and truly extended there. So that's, when I was talking about the shorts that we got off in the long. So I think that was the action there. And then, we head south into this level. That reacted, you got some buyers reacting off that level, that's fine. And then we retested this zone. And you can see that there is more conducive to a longer term sell-off. And that's when all the buyers, especially off this double bottom, and then all the buyers up here, anyone that's been buying, holding off this key level at 965, is starting to get flushed out of the action. Okay, so anyone that's bought up here got flushed out. They're still holding on there. That there is what you want to see. This kind of action, just grind up, especially after the sell-off, after the key level starts to hold again, especially at a lower level here, and you start to get that move down. Anyone that's really wanting to see it higher and is, a complete and utter a bull, they don't want to see this action. And when it starts to fail, you're looking for your shoulders to sell into, which, sometimes it's hard on the Hang Seng because that move down is quite savage. That move down from 170 down to 100-point move. If you trade the SPY, you're not used to seeing that. And that happens regularly. And that's just the start of the move down. So if you can get into that sort of shoulder there on a lower time frame, maybe a 1 minute chart somehow, then that's going to pay out quite big. And even a 50-point stop might seem like a lot. It's not a lot in the scheme of things, the way this Hang Seng can move. So what I'm looking for here, you can see pretty much marked it up. If we can spike higher, just to sucker in a few buyers, and then if we start to get a shoulder to work into, it'd be ideal something like this, not so much up and straight back down like that. That'd be a hard one to trade. That's what I'd be looking for. Okay, and see if we can, because there's a couple of good levels under here on the Hang Seng. You got 24,905, which you could just retest, and you've got 100 points up your sleeve. Or if it breaks through that, you expect it to flush deep into that 24,832 area. Okay, which could be a 200-point fall. So if you're trading, normally I'm looking at about $20 a point. If you're looking at that, or $5 a point even, then that's a very good handy move. All right, without too much risk, in the scheme of things. So let's get on to the dollar index. That is, still heading south. It's still under pressure. We had that little bounce, and that was on that just after coming into the number. And once the number came out, bang, unemployment higher, bit of safe haven buying them. But I think what it's trying to tell us is that it's not so much going to act as a safe haven, as in, the more dollars they start printing, the heavier they're going to be on the US dollar. And pretty much it's a complete short bias at the moment. So that's, these levels, once they pop up, they're getting sold into quite quickly, rejection quite quickly around the MA. So if we can start to hold this zone, then maybe there's some upside to come, but I think it's got to do a lot of work. We're not talking about just a straight up bounce. We would be talking more of a complex correction. By complex, I would mean, it doesn't know what we're talking about there, pop up and then some selling into something like that. This is going to get very complex, but that's what you'll be looking for. It's going to take some time to play out, I would expect, for this level to hold up. Otherwise, if the market goes into complete meltdown, it will be interesting to see how it reacts, whether it does react as a safe haven or everyone melts down. We're all expecting more stimulus, which is more dollars and a weaker US dollar potentially. So it's some fun times ahead. Now, the Hang Seng, the NASDAQ is what I was looking at. Right, you can see that this level through here, which it broke recently, held and rallied again. So we've come in at a lower level. Selling stepped in at a lower level there. So the trend is still up. We can't shake that off at the moment. If we start getting through this level again at 10, say 450, for example, 450, you'd start to attack this rising uptrend. All right, and that starts to come into question. It's just this action here, the way it sold off last night, could be a bit of a bear trap, as in sucker in some bears and rally again and squeeze them out. But the more headwinds that become apparent, when the US is not growing, they've got more unemployment claims last night, which they didn't expect. So if that's the case, and they've got, I think it's the end of this month, 31st, the job I don't know, what is the unemployment fund stop, so they have to figure that out. So they have to come out with some sort of more um, stimulus package. Otherwise, there's going to be a whole lot of people, and it's going to weigh on the economy if they don't have any money, all right, and they can't get the jobs. And I think the longer this goes on, which it looks like it's going to, especially in Australia, we're already going back into lockdown. The US has got incredible numbers, just keep ticking away. More virus concerns now. If they don't go into lockdown, there's going to be some separate major issues, and if they do, that's going to weigh on the economy a lot, because a lot of these jobs that could be there have just gone into sort of hibernation, I guess you could call it, are going to disappear. So those job numbers are going to increase unemployment, and if they pull back on the stimulus, then they've got a massive unemployment problem, and that's going to take a long time to work through the system. Right, so that's why sooner or later it's going to get bearish. And you're looking at that move up there. There's a lot of buyers that will need to get out. Will be chasing themselves. Stepping over themselves to get out the door. So that's why I'm looking a bit bearish. And you can see the action on that. Now, which was that? Was the open? So 11:30 open. It did sell off, and it bounced a bit, and that was probably on the expectations that the NASDAQ was going to bounce. But look at the NASDAQ. It didn't. It just held a lower high. So I think the Dow bounced, expecting we're going to keep that partying going, and all of a sudden the NASDAQ started to sell off, and then the Dow went with it. It started to fall over with it, and the same with the S&P. The open wasn't too bad, and then it started to really weigh on the S&P as well. Now, again, that trend is up. It's reverted back to the MAs here, but some sort of lower high coming to play and an extension down to the downside is going to create a bit of havoc. All right, the last thing I just want to look at, let's just look at the XJO for the Aussie boys and girls. That trend up is still intact. That move up there, that big spike up, we've given up a lot of the gains, and if this level starts to hold again, I'm not on the 30-minute chart, am I? Yep, I am. A 30-minute chart. So that trend up is still, still ticking along nicely. It's not as steep as this move up before. We've come back down. This leg up there is starting to look. The steepness is an important factor. Maybe we're doing something with this, but you can see this momentum was sideways and then it started to rally. This is essentially sideways too, but look, I'm not convinced that that's going to hold. All right, so if this level, this is 69.05, we start to take that out and finish well above that today, at least on the next couple of sessions, then we're going to attack those highs at 61.60 and above, and take out that and sort of go to the top end of the channel, which leads us back up towards the highs, the all-time highs at 71. But I think the way this is looking, it's going to take some time, and I don't think the market's going to be convinced yet that we're out of the woods, especially with the deficit looking to expand significantly in Australia. So I think that could weigh on the bullish action, and it won't take much for everyone to be chasing each other out the door, if you know what I mean. So I think there's a lot of sentiment around that. It's just sentiment is not enough, as in, what am I trying to say? The bullish sentiment's there, but everyone's got their finger on the sell button, I think, at the moment, because we shouldn't be here. We're extended. We've got a massive deficit. The same with the US. We've got so many problems that are just growing and growing and not getting fixed. It's okay to talk about vaccines, but they still can take some time. And I think every time the market turns south, they talk about a new vaccine just to try to support it, because whether they've got it or not is a different story. But the talk of it is keeping this market from selling off at this stage and keeping the bulls running. Now, they talk about in the US, they've got what are the numbers? I think they've done however many companies' earnings in the S&P 500 already reported. Now 77% of them have beaten expectations. That sounds great, until you remember the fact that the bar was set so low. It's not joking. It's not funny. They set the bar low on purpose because they thought we're going to get smacked. We know that, so let's set it low so we can at least beat it and not look too bad. So I think that happens a lot in the US. They always set the bar coming in earnings a bit lower than what they expect to try to outperform, and that's where the S&P has been doing well of late. Well, for a long time now. And so that 77%, I wouldn't read too much into it, because they're still, worse off. And I think things are going to start to tighten up a bit in the US economy. But anyway, that's my rant. Well, actually, I just want to kick over to oil. Oil backed off. We're going to find it. Oil backed off, and copper, the two things we keep looking at. So that there, that trend is potentially under attack. If it doesn't hold up here, we may start to pop again. And then if we find some selling to break down, if we get down to sort of the 40 again, if we trade down to 40, that means this uptrend's broken, and there could be some serious selling coming into it. But that, of course, is going to just depend on the overall index, what the markets are doing, what the share markets are doing, because that's where it's linked for supply and demand. The share markets continue to go up, supply is expected to continue. Demand is expected to continue to go up, and then we'll go from there. Gold, we'll have a look at that. Good idea. Copper. Copper failing again, failed. That was what we're looking at for a while there, and it started to fail again. Now, this is the zone. If this doesn't hold at 294.95, look, that could hold here and blast up straight up through. That's not a lower high just yet. Okay, lower high really for there is a break of this level, which means it's breaking that uptrend that you can see. Is that where I've got it? Yep, that uptrend. So if that starts to come under fire, and we start to break through this low at say 289, 89.30 thereabouts, then that's a key lower high of essentially a triple top. You could say 1, 2, 3. At least it's a major retest fail, we would say, with your shoulder thrown in for good measure. And that means that trend up, that's corrected, it's gone back up, it's failed for a second time on a major scale, then that would lead me to believe that there's going to be a bit of selling pressure start to step in. And there's a lot of long positions to unwind. Okay, you can see there's a major amount of long positions to unwind. It's pretty much been going up since the bottom was found back in March or thereabouts. Now gold, not much to say about gold, to be honest. It's just chugging higher. This is the spot gold, not the futures. I think we're going to extend to that. What is it, 1920? So that's the high, 1920. I think it's just inbound. It's just got its focused, its sights set on that. Nothing's going to pull it. It seems to be any strength into the US dollar. Gold's going sideways. When the weakness steps back into the US dollar, gold chugs higher. So the algos are out, the bulls are out, everything's out, looking for a run on that 1920 zone. Okay, if it's going to hit it, I'm expecting to flush it. That's going to trigger a lot of buyers. The euphoria of buying into new highs, and then I would expect some profit taking because the market is stretched. Now, again, we're just banking on that US dollar continuing. I don't think this is so much a safe haven buy as it is just linked to the US dollar. But if US dollar continues to mount down, we've got more stimulus coming there, then expect that just to continue to chug up to that 1920 zone. So that's, what's that, $40 away. Right, so at the moment, this level here is holding the trend up at 1870. So you're $15 away from that. If you got long somewhere in here, you'd probably, you got to be careful that it doesn't flush that level because it's going to be an obvious level to flush out. If we start to hold here and go sideways, then it's going to have another leg up. Right, so and then probably this inside level, if you can see that, let me just show you on a bigger scale. This inside, why doesn't it move? There you go. That inside level there, I would expect to be a target for a flush because that, you got push down, pop up. Anyone that's bought it here, anywhere in here, would probably be having their stops below that level, even below this inside level at 1882, and then down to say 1879. So it's a perfect opportunity to flush that level and run. Okay, and the market will probably do that time and time again. You can see it has a run up, 2 legs down, run up. This has got to do its second leg down, potentially run up. Not really 2 legs down there, but you can see what I mean. So that would be an ideal level to flush out and then run. Now, if it gets all the way down here, it's going to flush out a few more traders. Some longer term ones, which I don't expect, which could trigger, some even further selling, if that makes sense. So I don't think the market really would want to do that, to flush out that level. I think if it does, it's going to flush, then you'll be looking for a higher low. If it holds a higher low and you got stopped out, look to re-enter. Because I think it needs to flush, put some people back on the sidelines to create that momentum to continue higher. All right, so that's probably about it. I think we got through quite a bit there. Anyway, we'll call it a day. So I've gone a bit longer than I thought. Not hard to talk with me. Let's just see where the SPY is. Look at it, struggling here. Anyway, we'll see how that goes. Anyway, guys, thanks very much for joining. Just remember, if you do like what you hear, help us spread the word, leave us a like. Join us on Twitter. You can see all our links will be on our website, www.tradesetup.com.au. Check it out. check out the resources if you want to. Feel free to sign up for a trial where we do a bit more, bit more bits and pieces, if that makes sense. And then you'll see all our links on that website too. Have a great day. Thanks, Bobby. With more to come, mate. So yeah, we'll speak to you again soon. Have a great weekend, and I'll see you Monday.